Hey guys, welcome to today's video. Today, as usual, we're going to go over two stocks and show you guys how to form a bias, look left, look at the chart, look at the history, how to look at pre-market to form a plan and a bias, short or long, for the open. Let's get into it. The first one, LIZI, the biggest gap today, biggest volume, and it was gapping up on no news, and it's a China stock, and it had rotated its float pre-market, so what we know is it's incredibly bullish. We look on the chart, we see when was the last time it gapped up. For this one, it gapped up into 480, 460s. It was the 12th of October, so we see that level is the point where if it's below that level, and then it's a short trade, it's short biased. If it's above that level and holding above that level, then it could potentially be a long biased trade. We need to take more things into consideration, but we make a plan and we form a plan for key levels, breaking and holding or rejecting. Rejection, short, holding, long. Okay, with this one, we look at it, we say, okay, well, what's happening pre-market? We know that it's struggled to hold above $5, so we know $5 is key. Where's it found a level of support pre-market? So we can see 480 and then that 460 daily level is really key for this stock. It was unable to hold its gains pre-market, which is very common with a small cap stock. This one was more mid, it was about 20 million flow. So it fades back down, okay, and then as we come into the open, we come into 9 AM, it's going to test those levels. We're going to think yourselves, this one was up over 100%, okay? So anybody who's holding in this level, okay, for the long is taking profits, okay? So it's natural for a 100% gapper to pop or just sell off because people are trying to take profits. People who've held for a long time are wanting to take profits. It's natural. That's why the first 45 minutes to an hour is it favors short bias traders, favors the short play. With this one in the open, it popped and tried to break above that 460 to 480 level, bounced off it, rejected and faded back down. But it found some support around about $4, and then it starts to put in an initial low for the day, and then it pops above VWAP but can't hold and rejects that 460 daily level again. So these are key indications that it's still short biased. But the problem being is it can't hold VWAP, but then it starts to put in higher lows, tests VWAP, and then it breaks out of it, breaks out this wedge. But what we're looking for this one, which was the plan initially, was that 460 to 480. What does it do? Well, it breaks up into that pre-market. What was pre-market support that broke. So we know that's going to have a little bit of selling. Shorts maybe jumping in front of it. It pops, pulls back. But then what we're looking for, when it pulls back and then begins to push, as soon as it breaks back above that 480, that's when the long trade's back on. As soon as this level's broke, the assumption would be the push and breakthrough pre-market highs, the push parabolic squeeze. We look at the daily level again. Where are the levels above pre-market highs that we could go to? Well, once it faded, we know 840 is the maximum it's going to probably go to today. We have a bounce, we have a fade and bounce, but the one closest to the pre-market levels is this 570. We've got a little bit of support here from the previous levels, but it's mainly this one here, 574. So we know that's maybe the maximum it's going to go to before a pullback. It could squeeze high, we don't know. But with this one here, it's ran up, couldn't really find any buyers, couldn't squeeze out the pre-market, anybody risking pre-market, and it just flushes back down. So the shorts can see weakness again. So the shorts come in, expecting the fade below VWAP, the bounce, and then flush again, but it doesn't happen. We never get that new low. It just bounces, finds support, and starts to put in high lows and grinds up. It tries again with that 460 to 480, but it can't do it, and it puts in a lower high. So that's another indication for shorts to get in. So you've got shorts getting in here, shorts getting in here, risk in there. Now you've got new shorts coming in, risk in that area. So we've basically got between $5 and $5.20 of an area for shorts to risk. So we know for it to become long biased, we know it needs to hold above 480 to 460. Well, it starts to hold in base above 460, pushed into 480s. But we've got this trend line wedge that's formed over the last few hours. We push through that level and pull back. Now, a wedge break at the first chance doesn't really give a good signal. You want to wait for a pullback and then a new high for that confirmation. Okay, so we look and see 487 to 488. We want to see that break and hold or just break again. It pops in, and this bit here is like a bit of a fake out, shaking some weak hands, taking a bit more liquidity, then it curls up and goes. The entry is any time price breaks back above that 488 level. That's the entry. Don't just jump in on a wedge break on its own. Let it break, pull back, and then put a new high in. That's the signal. Don't just jump in here because you're just going to get trapped. Yes, this curled up. Not all of these work. Some of them just testing them and fade back down. So that's where the edge is. Let the wedge break, pull back, and put in new highs. This one continued to squeeze. It just took everybody out. The lower highs got taken out. Higher day got taken out. Pre-market highs. Anybody risking those levels just squeezed out. And then it finds some resistance at that 574, which is the when it broke down the last bounce before it continued to fade again. Couldn't break that level. You've got a couple of attempts, but you're just chasing it buying up here. There's just no point in getting in up here. What you want to see is, if you were going to take it, is you want to see it break that level. You want to see it pull back and put in a new high. But this one couldn't break 590. It just went up and then just rolled back over. Happens time and time again. Don't chase it. Don't buy up at the highs. Wait for the correct setup, just above VWAP, just next to some levels. You know, shorts are going to be covering around about here. You know, longs are wanting to get in. It's a good move. Next stock, EVK. This one broke out in the past. It has major key levels on the daily, so we know the last breakout was only a few weeks ago. That one was the 27th of October. It couldn't break above $7. $7 is key. Let's draw a line in the sand and say above $7, this one is a long bias stock. What we also know is from the last breakout is I trade that one. What happened was it 560s was the last level of support before it rolled over and become a short. So we know they couldn't hold that level the last time it broke out. So you know that level's key as well. And what we could see pre-market is that 560, it hit that level and it was resistance. And then what it did, pulled back and broke it. And then it was resistance. It pops up, bounces back down, it becomes support. It's support, and it breaks. Then resistance, and then it breaks. And this is what's key, guys, is you draw your lines, draw your levels, wait for them to break, wait for them to hold. You get better confirmation. This one wasn't an ideal setup. That line and VWAP lined perfectly. What you want to see is you want to see this pink line be a little dig down here. It breaks above it, pulls back, and goes high again. What you don't really want to see is the way that this one's traded there is it's all happened below the line, which is not really great confirmation. But no trade's always the same. You're always trying to adapt the process and, you know, do what's best. What was key though was the volume. It just came in and just wiped out everybody. It took out those risking higher day, those pre-market levels, and just blew straight through that $7 that we struggled with the last time. Up here, sorry. And it continued to grind up. But what happened there is it just couldn't hold above $8 and then it flushed. That flush tells shorts that the short trade's on. Getting in here, risking higher day. It pops up and then rolls over and then it tries again, fades. And then this is what I really wanted to show you, but this is the main reason I wanted to show this trade. These are working really, really well at the moment for a long trade. They're not always great follow through. The time frame of when it happens is really important. The volume and how fast it moves through price levels. The second attempt, shorts are getting in now, okay. They're feeling confident. It couldn't really get above 750, okay. And then what you've got is what a lot of shorts will do is they'll just hold this until that line breaks and it breaks support, which is this event that's happening right here. Keep an eye out for this, guys. Draw your lines. So you've got like a triangle and then it breaks out that triangle. This happens time and time again. These are working really, really well at the moment. You let it break out the wedge, let it pull back, wait for it to break back above that line with conviction. Don't give it a few seconds. Don't let it just, you know it's going to continue going. You can see the timing sales, you can see the volume. Let it break back above that level, because what you get a lot of times is a pop and fail and roll back over. It's the right time just before lunch finishes. With this one here, it squeezed out anybody who was getting in around about here, but it didn't have the conviction. It wasn't the right time frame, and it didn't bring in enough volume really to have that run and push and take out all the shorts, risking high of day. And then it just rolled over. If this event happened closer to about 2 hours later into the close, it probably would have ran and squeezed after hours as well, just because that's just how they work. These trades work differently, and they have better success at certain times, and that's what you learn over time as well as a day trader. With this one though, I really wanted to highlight this. Keep an eye out for that, the triangle breakout. It's working really well at the moment. The best one is where it forms a triangle, fades below VWAP, traps all of the people doing the VWAP reject, right? And then what it does is, just as you think it's going to roll over, it just swipes it up again and it runs up. When this one happens, it just takes out all VWAP rejects, all of the people risking the higher lows, and then it just rips up through everybody risking high of day. They're the ones you want to look for, the traps. It's called a trap, where it looks like it's going to roll over, and then it really comes up quickly and swipes all of the stop limits away for those short traders. Keep an eye out for that, guys. It's working really, really, really well at the moment. Let it break out the wedge, let it pull back. As soon as it breaks and puts in a new 1 or 5 minute high, that's your entry. Risking below the pullback or risking below the wedge, just dependent. Know your support levels, know where the trade's wrong, know where you're risking. Just because you want to risk 10 cents, if it flushes, you're risking whatever the market makers let you. This when you've got a stop, you hit market, they decide when you get out. Hope you enjoyed today's video, guys. Try to keep it a bit short. I try to get straight to the point. Got some good videos coming next week. Going to go over my plays, the time frames, how to prepare for pre-market. Going to go over how me tracker and the volume and stuff for pre-market. So that's going to be a good video, guys, and I'll catch you next week.